A cost of living crisis, high inflation, high energy, high food prices. It's been a high tension week in Nigeria. Will nationwide protests force a rethink of the country's key economic reforms? Good day. It's another episode of Business Week on your Pan-African news channel, Arise. What a week it's been in Africa's most populous nation as nationwide protests begin in Nigeria. Ethiopia takes a giant economic reform step with the liberalization of its exchange rate as part of an IMF bailout. The world's first AI law also comes into force, and Kenyan courts declare the country's finance bill unconstitutional. I'm here to help you catch up as always. If you couldn't keep up, I'm Rolake Akikugbe-Filani. We'll take a look at global energy commodities. Not a very good week there for global oil commodities and gas. Oil, Brent fell by 2.9%. WTI crude was down by 3.26%. The big one here really is U.S. inflation, U.S. jobs data, actually, I beg your pardon, which came out saying that unemployment in July rose to, I think it was about 4.3%, thereabouts. Not a good trajectory, really, and probably signaling that rate cuts will setting from September. Of course, the Fed had held rate cuts steady in the last reading, but natural gas and RBOB gasoline also falling as well. Let's take a look at equities markets from around the world, starting with Nigeria. The stock exchange in Nigeria scaled through the week despite the nationwide protests and despite the previous week's market rout. The all-share index closed at 0.4% up at 97,745.73 points. Quite a muted amount of shares traded, 210 million. Not a lot of activity this week on the market. Value 3.9 billion. Market cap back down to 55.49 trillion. Let's take a look at African markets. Well, a negative picture for Johannesburg, Accra, and Nairobi there. Joburg was the big one, down by 1.62%, but Casablanca and Morocco held steady, up by 0.17%. Let's take a look at Wall Street. No surprises here. All the major indices were down at the end of the week, reading into the U.S. non-farm payrolls, which showed rising unemployment. Perhaps monetary authorities have gone a bit overboard with their tightening season there. But you can see that Dow was down by 1.9% and NASDAQ tech stocks index down by 2.47%. Now, my top picks from around the world. Okay, first big news here is that the world's first artificial intelligence law has finally come into force. This has been 4 years in the making, and this law was passed by the European Commission and will be targeted at big tech companies as well as smaller tech companies. But what this law essentially does, it follows a risk-based approach to regulation. So different types of AI innovation will be subject to different rules depending on how risky they are. And under the law, which has been passed by the European Union, there's potentially a fine of up to 7% of a company's global annual revenues should it violate the laws of the new artificial intelligence regulation that's being passed by the EU. The IMF in Ethiopia, IMF of course being around the African continent, Ethiopia has finally agreed to liberalize its exchange rate in exchange for an IMF bailout. We've heard that tune before. That bailout package is worth about $4 billion. The immediate signing and conclusion of the deal this past week means that Ethiopia will get an initial disbursement of $1 billion. So the Ethiopian authorities have allowed the country's currency to plunge. That's the B currency, BIRR. And Ethiopia has been grappling with high inflation rates, of course, but it appears that the government is signaling that it wants to open up the economy more to foreign investment. Of course, Ethiopia also defaulted on its debt, one of the 4 African countries to have done so in the past year. The Fed has held interest rates, as I highlighted before, keeping it steady, but signaling that a rate cut in September is probably likely. Meanwhile, the Bank of England has cut interest rates by 25 basis points. after 14 successive hikes over the past few years. Rates are down for the first time in the UK for over 5 years. This will come as a relief to mortgage owners and borrowers in the UK market. But again, are we entering a season and period of monetary easing around the world? Nigeria's President Bola Ahmed Tinubu has ordered the sale of crude oil to domestic refineries, including the Dangote refinery, in Naira. If you've been following news on the rise here in the past few weeks, there had been a stand-up between the Dangote refinery and some of Nigeria's key oil and gas sector stakeholders in the public sector. Are we reaching some sort of détente here? Well, let's see. But there is a domestic crude supply obligation, issues around the pricing of crude in dollars to domestic refineries. But now the government has says crude can be sold to refineries in Naira at market-determined prices, at least for 6 months. Well, we don't know what will happen after that. There's also an issue of the actual supply of crude. NNPC has said it will supply 4 cargoes monthly to Dangote. Let's see how that actually pans out. And finally, Liberian president has suspended the central bank governor, Aliosis Talu, after the General Audit Commission found on illegal payments totaling almost $100 million from the central bank to the country's parliament, as well as for salary payments. So there's an ongoing audit of the central bank's books in Liberia, and also the Financial Intelligence Agency has been picking up and rounding off former ministers under the government of former Liberian president, former soccer star George Weah.